Good morning, all. Today we are going to discuss about manual accounting, its advantages and limitations, which come as an introduction for computerized accounting. First, let us understand the definition of accounting as given by AICPA, which stands for American Institute of Certified Public Accountants. According to that, the definition goes like this: the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are in part of at least of financial character and interpreting the results thereof. So to understand clearly this definition, let us go and understand the accounting cycle, with which we can easily understand the definition. The first one here is collect data relating to transaction. Here, the transactions means the financial transactions, the transactions which include financial component, money component are called as financial transactions. When we are recording the accounting entries, we have to consider only financial transactions. So whatever the transactions that we have, from that we need to identify the financial transaction first. Next, we must be able to measure the transaction in terms of money, because as we are entering only monetary transactions, we need to assess the value of the transaction in terms of money. After identifying the monetary transactions, the next step is to journalize. Journal is called book of original entry or book of first entry. From the transaction, we enter into journal. When we are entering into journal, we see to it that the debit is equal to credit. After journalizing the transactions, we post them into ledger. The process of writing into ledger from journal is called as posting. After that, a trial balance will be prepared and checked whether the balance is getting tallied or not. After preparing trial balance, if any entries or any transactions for which a journal entry is not written, we call such transactions as adjustments. So we'll try to prepare the adjustments and again prepare the adjusted trial balance, incorporating all those adjustments into the new trial balance, which is named as adjusted trial balance. Next, after that, financial statements will be prepared. Financial statements include manufacturing account, trading, profit and loss account, and balance sheet. In case of trading organizations, we do not have manufacturing account. Next, we'll close the accounts after preparing financial statements. After closing the books of accounts, post-closing trial balance will be prepared. And we will report the results to the management and they will be safeguarded by the management. This is the process of accounting cycle in case of manual accounting. First, from the transaction, we journalize the transactions. Writing into journal is called entry. And then from journal, we'll write them into ledger. Writing from journal to ledger is called as posting. After that, trial balance is prepared. Writing into trial balance is called as summarizing. Next, final accounts are prepared, which comes under analyzing. And after preparing the final accounts, they will be interpreted by the management accountants. So this is the manual counting cycle. Let us repeat once again. From monetary transactions, we prepare a journal that is called entering into journal, into ledger. Next, we will summarize in trial balance. We will prepare analysis. We will do analysis with the help of financial statements, which includes manufacturing account, trading account, profit and loss account, and balance sheet. And later they will be reported to authorities. Next, let us understand what are the advantages of manual accounting. The first one is it is cheaper. Why it is cheaper? Because we don't require any software or any technical assistance here. In case of technological assistance is not required, that's why it is a bit cheaper when compared to computerized accounting. Next we have, it is suitable for small scale businesses because in small scale business, the amount of transactions will be minimum. For that reason, this manual accounting system will be very much suitable for small scale business units. And there is no risk of obsolescence. That is, we are not using any software, we are writing manually. So as and when the techniques are changed, we adopt those techniques into manual accounting, so there is no risk of obsolescence. Then the next advantage of manual accounting is there is less risk of loss of data. If in computerized accounting, if there is any virus attack or any problem, the loss of data is possible, whereas that is not possible in case of manual accounting system. And fraud and embezzlement is least possible in financial accounting when they are prepared manually. The reason is after writing the transactions into the books of accounts, they cannot be corrected by writing off. If any error has occurred, they need to be rectified only by writing a rectification entry, but they cannot be corrected by striking off. For that reason, the fraud and embezzlement will be minimum in case of manual accounting system. Next advantage is suitable for a particular business. Whenever the type of business changes, the method of maintaining accounts will be adjusted according to that particular type of business. As it is done manually, the human capacity holds good in adjusting the preparation of accounts according to the need of the business. The next one is there is no need for a computer trained operator. And next we have is there is more scope of creativity. As it is prepared by a human, as it is prepared manually, the creativity can be included while preparing the accounts, and they can be prepared in such a way that they can be easily understood by the other parties who are relying on that. Let us understand the limitations of manual accounting. The first one is it may not be that suitable for large scale businesses where the number of transactions are in thousands. It will be difficult to maintain all the transactions manually. It's not impossible, but it is difficult. When large volume of transactions are there, it is difficult to handle the transactions and the scope of errors may also increase. When we are using manual accounting system, we cannot update the accounts as and when required. If we need to update anything, we need to again restart writing everything. So that is main disadvantage of manual accounting. Next, there is difficulty in location of error because every thing we need to cross check again whenever the error occurs. If I identified an error while preparing trial balance due to the balance of the trial balance is not tallied, then again I need to go to journal, again I need to go to ledger and cross check the transactions. For that reason, it is very difficult for me to locate the error very fast. And queries, if I want the details of the salaries, total salaries of the month that I have paid for the staff for the past 6 months, I need to take the books of accounts and calculate manually all the amounts. But in case of computerized accounting, we can get those amounts directly. So handling queries is a bit difficult or time taking or time consuming in case of manual accounting. It's not possible in manual accounting to record physical quantity of the stock. This is one more drawback. And we'll have more paperwork in manual accounting system. So now we could understand what are the advantages and limitations of manual accounting system with this small session. Thank you.